Welcome. I'm Carvelli, Master of Finance. Thanks for tuning in today. Our topic today is credit card interest explained. Credit card interest works in a few different ways. We'll start with the first rule of thumb. So you're going to get a credit card bill in about a month, but that could be different depending on your statement period. So keep that in mind. But you got to pay off the whole balance. So if the bill's $950, you got to pay off that whole amount, not to pay interest on the next payment cycle. Now, keep this in mind. A minimum payment does nothing to avoid that interest on the next payment cycle. Now, keep in mind, if you don't pay off your whole credit card bill, it's going to roll into your next statement and you're going to get charged interest. It's very important to understand any future purchases, you're going to be getting charged interest if you don't pay those and the old balance off in full. Now, also keep this in mind. If you put $500 on the credit card currently and you have $1,000 owing and you say, I want to make a $1,000 payment, it's going to go towards the old money you owe, that old $1,000. And that $500 is going to be needed to be paid immediately. And you're going to get charged interest unless you pay off the whole $1,500. It's very important, very tricky, so understand it. In closing, credit cards can be a big trap. The reason why is because they don't explain the small print to you. You need a lawyer for this practically. It's so small you can't even read it. And they don't tell you anything about it on the phone. They just try to sell you insurances and products. So they're not terrible. It's up to you to do your homework and know and get educated on this. For example, you spend $5,000 on the card and you didn't realize all this and you don't have $5,000 and the next thing you know, you're making a $1,000 payment. You're still making 29% interest payments on this card till you get out of that $5,000. That's deadly and it's very hard to get out of that. So be careful in the trap. How do I get a lower credit card interest rate? Well, this starts at the beginning of when you apply. You got to shop for a low rate card. Typically, these are different than points cards. So you got to do this when you're applying. Can I pay my credit card with another credit card? No, not with the physical credit card, but you can with a balance transfer check. And typically these balance transfers are at cheaper rates. What is the grace period on a credit card payment? It is from the end of the billing cycle to the date the payment is due. Invest yourself into financial literacy. Check out my ebook at masteroffinance.com. Subscribe to our YouTube channel, follow us on Instagram, and like us on Facebook. I'm Carvelli, Master of Finance. Tell all your friends and family all over the world, God bless, much love.